Welcome back to Bazaar Morning Call. For now, the market is still where it was about half an hour ago, under a bit of pressure, making an attempt to recover. But let's talk about the real estate space. DLF is one stock, or one company rather, that has been making a lot of changes. In fact, it has been reducing its debt. It has been paring off its finance costs. REITs is also in the works for the company. But can the recent surge in COVID cases and a job reservation bill in Haryana pose fresh challenges? We find out while also taking stock of whether home financiers cutting rates further is providing a tailwind for home sales. So lots to talk about. We have Ashok Tyagi of DLF who joins in now with his view. Mr. Tyagi, good morning. It's always a pleasure speaking with you. The feedback that we've gotten so far is that although the COVID cases are rising, it has not impacted demand in a big way. And in fact, now with more work from home situation, people prefer to sort of, elevate their homes or buy new homes. Is that your view as well? And how is the situation on the ground?
Okay, so good morning. Frankly, ever since we opened after the initial lockdown, say in about the July-August time frame, we have seen almost a consistent uptick in the demand traction. There's no doubt about that. And it's increasingly no longer just about one particular geography or one particular price segment. This is a far more secular, demand comeback that's happening. So, we have seen, as I mentioned earlier also on your channel, we have seen demand come back not only in the so-called, mid price points, but also in very high ticket sizes, including the camellias, which today is selling almost at a pace that we were not selling even for the last 2 or 3 years. We did, I think, a total of 3 launches of independent floors priced between 3 to 4 crores each. All of them sort of got taken on day one. We've had sales resurgence in geographies as diverse as Lucknow and Indore and Chandigarh and Kasauli. So clearly things are looking better. The only caveat I would like to add here is that things are looking better for a select few developers. So I think people are still very, I'd say, cautious about buying from relatively smaller developers. But I think, most of the major developers, as you know, the sales that are being reported across the board by the listed developers are reporting reasonably healthy numbers of pre-sales now for the last 2 quarters, really.
Okay. Good morning, Mr. Tyagi. Thank you very much. Well, can you update us on your REIT plans?
Okay. So, as we mentioned, Lataji, that we have begun the process of making DLF Cyber City REIT ready. As you know, in the case of all the 3 listed REITs so far, there was a substantial, process before the REIT listing took place for the internal structuring, etc., to become REIT efficient. Okay. And that is the process that we have commenced. We have hired the consultants, 1 banker, 1 law firm, 1 tax firm. So that work is commencing. We believe, Lata, that in about 4 quarters, we should be completely REIT ready. Oh. And then it's a question of only 2 things. A, the markets, of how the REIT markets at that time are. And B, what is the view of the 2 shareholders, frankly, both DLF and GIC, as to is that the right time to hit the market. But in the next within definitely the fiscal 21-22, by the end of it, we should be completely REIT ready for sure.
Okay. So how are you planning interest cost? You just raised some NCDs. By the end of FY22, what will be the net debt situation? Because you would have done some REIT, hopefully. And what will be the interest average outgo?
So I would separate the net debt discussions of the rental company and the development company. Okay. The rental JV with GIC has a net debt of about 17,500 crores, which today is approximately 5 times annual rental revenue. Clearly, as in when the REIT happens, there will be one major reduction in that will happen. But, I would still say that I would hazard from giving you a firm timeline of when the REIT will happen. But clearly, we are not forecasting the rent to debt ratio to go up significantly from here. Our own internal projections believe that once things come back to normal, our cash accruals should be sufficient for driving both the capex, because that is a very capex intensive business, as well as paying sufficient dividend to DLF and GIC, the 2 shareholders. On the DLF Limited, the residential side of the business, our net debt is a ballpark about 5,000 crores, which is today a debt equity ratio of about 0.15, 0.16. I mean, clearly, as we get into a more aggressive launch phase and our pre-sales and sales improve and the cash flows from those improve, this number directionally will have to head down. I mean, there may be a 1 or 2 quarters beach may, but overall this number has to come down. The only thing, Lata, what we are no longer doing is that we are past the stage now, because we believe that the debt level is now extremely comfortable. We are past the stage of doing very significant non-core divestitures for cutting down debt. But operating cash flows should continue to be positive. In fact, they should strengthen, we believe. And as they strengthen, this debt level will keep on coming down. As I've always maintained that we believe that once the debt level comes down to say about a couple of thousand odd crores, it's like a zero or a near zero in that condition. And I think we may be 12 to 18 months away from that. But clearly, hopefully with each quarter, you should be seeing a continuous southward, move onto this debt. That is clear. For the last 3 quarters, if I'm not mistaken, we have reported positive operating cash flows, and I think that trend should continue.
Okay, so that's on the debt and the operating cash flow, but you made a very interesting point that we are living in times when there will be demand, but for selective players, I am guessing a lot of the organized players like yourselves, because of how cautious people are. So you're sitting on bookings of almost 1,000 crores as of Q3, which was already a growth of 40%. What kind of growth can we expect in terms of sales volumes and bookings for DLF over the next few quarters?
So, I think officially we'll come back with a 21-22 guidance when we declare the annual results for March, which will be somewhere around early to mid-May. But we have hit a run rate of about 1,000 crores plus of pre-sales every quarter. I think clearly that number would be maintained, and hopefully as we hit 21-22, that number should keep on getting strengthened in each quarter. But I would right now hesitate from giving you a specific number, because that's something that we would share with the wider market at the time of the annual results. But clearly, I think 1,000 crores per quarter plus is definitely what we should be achieving, and hopefully this trajectory should keep on getting northwards.
Okay. All right, Mr. Tyagi, we will have to leave it at that. Out of time today. Thank you very much for sparing time for us. Well, as you can see, corporate India is very confident. You've heard it from DLF. You heard it earlier on another sector from Shriram Transport. People expecting better business, better margins. But look at the markets, absolutely going only southward at this point in time. So that's the global cue for you. We'll take a break and then turn our attention to the primary space. Barbecue Nation Hospitality is going to start its roadshow today. Rahul Agarwal, CEO, joining us in a minute.